The hardest part of tax season is not the math. It's discovering in March that the return you assumed you'd file is the wrong one for the entity you actually elected. The form is downstream of a decision you already made in Module 4 or Module 11. This unit walks the 3 federal return stacks, names the deadline trap that catches first-time S-corp filers every year, and surfaces the one software product mistake that wastes a weekend in early April. Before the dollar amount, before the deduction questions, before any of the tax mechanics in the rest of this module, the form you're filing is the first question. Which one depends on what you elected? A coach who stayed a sole member LLC is on a different form than a coach who filed Form 2553 to elect S-corp last June. Same revenue, same client base, completely different paperwork stack. The entity choice from Modules 4 and 11 is what determines the answer here. The amount you owe is downstream. 3 structures, 3 federal return shapes. A sole prop or single member LLC files 1 document, Form 1040 with Schedule C attached, no K1, the simplest path. An S-corp files 2 documents, Form 1120S at the entity level produces a K1, which then flows to the owner's personal 1040. A multi-member LLC also files 2. Form 1065 at the partnership level produces 1 K1 per member. Each member carries theirs to their own 1040. The complexity scales with the structure, and so does the deadline pressure. Path 1 is the default for most coaches in year 1. 1 return end-to-end. Schedule C carries the business income. Schedule SE computes the self-employment tax on the same number. The net flows up to the 1040 and gets stacked with W-2 income, interest, dividends, anything else on the personal return. If you never filed Form 2553, this is your filing posture. It stays this way until you actively change it. Year 1, Year 2, Year 5, same shape until the entity decision moves. Path 2 is where it gets interesting. The S-corp owner is technically wearing 2 hats. The corporation files Form 1120S by March 15th, computes the business profit, and issues a K1 reporting your share. You then take that K1 to your personal 1040 by April 15th. You're also on payroll from your own corporation, so a W-2 from the S-corp shows up on the same personal return. 3 documents in motion, 1120S, K1, 1040, 3 things that have to coordinate. That coordination cost is why most S-corp owners eventually hire a CPA. Path 3 looks structurally like Path 2, but the document on top is different. A multi-member LLC is a partnership for federal tax purposes by default, so the entity files Form 1065 by March 15th. The partnership doesn't pay tax itself. It produces a K1 for each member showing their share of profit, loss, and any special allocations. Each member then carries their K1 to their personal 1040. 2 coaches in a partnership means 2 K1s, 2 personal returns, 1 entity return. If you have a coaching partner and you've been filing 2 separate Schedule Cs, the entity and the return don't match. The March 15 deadline trips first-time S-corp filers more reliably than any other date in the calendar. Personal returns are due April 15th. Every adult in America knows that. Business returns are due a month earlier because the K1 has to exist before the personal return can close around it. The dependency drives the deadline. An S-corp filer who extends has to file 2 extensions, Form 7004 for the 1120S extension to September 15th, plus Form 4868 for the personal extension to October 15th. One extension does not cover both returns. Missing one or both means late filing penalties at the entity level, the personal level, or both. Priya is a composite of half a dozen coaches who told me the same story. Year 1, single member LLC, clean Schedule C, filed in TurboTax self-employed. The whole return took an afternoon. Year 2, she elected S-corp during the year. March came around and she bought TurboTax self-employed again because that's what worked last time. Spent a weekend confused about why the software wouldn't let her create a 1120S. The product she needed was TurboTax Business, a separate desktop-only product. By the time she figured that out, the CPA she'd been quietly tracking since Module 3 had a March slot open. The 1120S got filed in time. The action before you move on is short. Pull your most recent return. Confirm what you actually filed. 1040 alone, 1040 with a K1 attached from an 1120S, or 1040 with a K1 from a 1065. Put the March 15 and April 15 deadlines on your calendar for the current year. If you're S-corp or partnership, add a second reminder 30 days earlier for the CPA document handoff. The deadline that gets missed is the deadline that lives in your head and not in your calendar.